Welcome to my daily reports market analysis videos with me, Richard Perry, market analyst at Hantec on Friday, 24th of July. There's certainly been a deterioration in the risk appetite that markets have been trading with in recent days. We've seen corrections coming through equity markets, sort of driven by the escalation of diplomatic tensions between the US and China has sort of been growing this week, and it sort of culminated in the two countries announcing that consulates in both countries of each other would be shut. And it's sort of creating this ever more hostile attitude towards each other. It's not really playing out all that well in markets that are continuing to sort of play into the concerns over the US COVID infection rates, and just sort of giving a bit of an excuse for a corrective move. How sustainable the move is on a correction will be yet to play out, but certainly you can still see trends in place. Certainly on the S&P 500, bit of a reversal on a near-term basis, but how sustainable that move lower is remains to be seen. But it has started to see the US China yuan rate starting to pick up back above 7, so that's sort of tends to be a bit of a benchmark, doesn't it? That 7 level on the yuan. That's again playing into the risk reversion that we've got at the moment. Equity markets all lower today in the European space, around about 1.5% or so down. Interesting that gold rally continues. I mean, I say it continues, and I'll talk about the technical implications of it, but not a million miles off $1,900 now. But are there beginning to be signs of a little bit of a correction or a bit of profit taking perhaps? That euro dollar rate also similarly above 116 still. So yeah, really interesting run higher on euro dollar and gold that have yet to hit that profit taking measures. The oil price dropped back yesterday on that. Let's show you Brent crude, actually gives you a better gauge. Dropped back yesterday, but again, it's still seemingly in this track higher, the run higher that it's had, and it's still likely to be bought into. And we haven't had any real reversal signals yet on that oil price, but yeah, some interesting moves that we've got today. Now, in terms of data points today, we've got the flash PMI data. Flash PMIs for Eurozone and UK came out pretty much better than expected, didn't they? 51 above 50 on the manufacturing for Eurozone. Services much better at 55. So broadly, an expansion of 54.8 or just above 50 is an expansion, but that's from June to July. So the recovery is progressing, but it'll be interesting to see how those data points continue to develop. But UK side, even better actually. Recovery in July, strong on composite, 57.1. So the data points for Eurozone and UK pretty decent actually. This afternoon we've got the US numbers. Flash manufacturing at 51.5, flash services at 51. Also new home sales expected to grow in June to 700,000 units. So that takes me to my chart of the day, which is the Kiwi dollar. I did Aussie dollar the other day, breakout above 70.60 on Aussie dollar. Kiwi, similar sort of move really, breakout above 66, big figure, breakout of a range play, 63.70 to 65.85, so thereabouts, around about 280 pips worth of breakout. 215 pips worth of breakout. So an upside move is imminent, seemingly on a medium-term basis. But I think on a very near-term basis, I think we could see this pull back into the breakout area, 65, 85, 66 figure. If we can hold that as a level of a breakout, then I think that's a pretty strong signal actually that we're going to see gains. But you can see here that the Kiwi breakout, 67.55, that immediately comes in as your test, and I think that that is likely to be tested in the coming weeks. It's just that on a near-term basis you've got this pullback, and I think it's likely to produce another buying opportunity. I think anything still above 65 figure really is a good opportunity to buy into support on the Kiwi, but just on a very near-term basis, just sort of rolling back a little bit, helping to renew upside potential arguably on these signals. And you've got around 55.60 on RSI seems to be where the support comes in throughout this recovery. So yeah, an opportunity would be between the sort of 65.15. I'm taking that as the 65.25 to 66 figure area. A high low around that point would be a decent opportunity. You can see here on the hourly chart, little rolling over, little pullback on this hourly chart. But as I said, or anything around back into the belly of the support really. But anything above 65.25, 65.50, I think that's an opportunity. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars, and also click to watch our Trader Talks videos to gain some top trading ideas.